Hey guys, welcome back to Cheddar, brought to you by our friends at HP. It's right over here.
Yeah, there you go.
Serendipity Labs is breaking into the co-working space with an upscale hospitality-based model. Now, the company just raised a fresh round of more than $11 million from strategic investors and real estate developers. And joining us now is John Arenas. He's the Chief Executive Officer over at that company. John, such a pleasure to talk to you.
Yeah,
thanks so much for joining us. So how does Serendipity Labs differentiate itself from all those other co-working spaces that are out there? There's so many now. What separates you guys?
Yeah, well, co-working has traditionally been something that came up as a creative class, technology-based way to work together. And what we're doing is bringing an upscale version of it for the trusted knowledge worker to serve individuals who can choose how they want to work, kind of the new consumer of the workplace. So it goes beyond millennial and into across every industry sector.
Very interesting. I know that you guys are looking to sort of build out a different infrastructure in place. Why is it that you think that speaks to more established businesses and perhaps the startup culture that you normally see at these shared work environments?
Well, it's a larger addressable market. I mean, if you look at the total number of companies that have today less than 3,000 square feet under lease, they often want to move out of those leases into something much more flexible. There's some big reasons for that as large companies, but there's just really a big movement towards consumerization that includes all the employees of these larger organizations, established companies. So by working across industry sector, not just technology and not just a younger cohort, we have a much larger addressable market and can build a bigger business.
Well, on that note, let's talk about that. You soon will have a large space here in Manhattan. You guys are partnering with Chinese company. So how does that fit in kind of your guys' plans of expansion and just in general in terms of your philosophy for the company?
So we've been growing through very, opportunistic growth model with where we have a hub and spoke version of our business where we have company-owned locations, joint ventures, and also license and franchise partnerships. And that allows us to grow very efficiently with capital. The partnership is one in which we're able to add another 78 locations in China to our network without having to deploy capital, people, or other resources into China, which, as any established company knows, is a hard it's a hard market to break into.
Let's stay with the capital for a second and compare it to one of your major competitors, which is WeWork. This is a company that we know. We reported here on Cheddar. Just last month, they raised an additional $760 million. But right now, I mean, this company's only bringing in about $1 billion a year in revenue, but valued at $20 billion. At this point in time, do you think tapping into the VC market is really the best strategy for you guys to be able to eclipse a company like WeWork?
Well, I don't know that we're necessarily trying to eclipse WeWork. As I mentioned, the addressable market, just to put it in kind of some numbers that everyone can appreciate how large it is, the U.S. market for office space is about 12 billion square feet. If co-working were to be 5% of that, it would be about 600 million square feet. Today, it's about 50 million square feet. So there's a long way to go, and there's an opportunity to grow with the right brand in the right way, with the right capital. And we believe that so far we've raised capital through not only the private market, through strategic investors directly into the company, but also through partnerships and franchise. So we raised about another $100 million through our franchise organization, which includes recruiting very sophisticated hotel operators who operate other brands like Starwood and Marriott, Hilton, and now they are operating Serendipity Labs as well.
All right, explain to our viewers what you're talking about with bet on older millennials, especially going to suburban areas. Are
Sure,
you guys
I mean, I think
expand in that particular area, or what are you talking about?
I think it's partly about on older millennials, because if you think about it, we've been talking about millennials for so long that they actually have grown up.
Right.
That age cohort goes up to age 37, and I think the numbers prove now that that's actually a group of people that is thinking about their next stage of life and actually already in it. 60% of millennials now today are looking at living in a detached single-family home over the next 5 years. So that's a pretty big change in how people think about millennials. They didn't stand still.
No, exactly.
No, they didn't. I know you touched on the infrastructure earlier that you already have in place. I mean, that allows, I guess, these bigger, more established corporations to trust you perhaps a little bit more than a Knotel, than a WeWork. I mean, but is there another bigger catch? Are you taking the same cut that WeWork would take from renting out or leasing out the space?
Well, I mean, we have a niche of a certain size that we're trying to help the established companies with. But yes, you're right. Having a technology platform that delivers on service and compliance that is really important to large companies is a big differentiator for us. So if a company is looking to variabilize their real estate platform, reduce their obligations, which under new financial accounting standard boards rules are now actually debt on their balance sheet, they're really working to try and get that off. So for us to be an extension of the real estate platform, we want to take a piece of it, not necessarily fully replace it. So it is a different business model to try and do 80,000 feet for one company in a place versus be that extension of their platform to support mobility of their trusted knowledge
So then you
workers.
help like financial services companies make sure they're meeting their regulations, as well as the healthcare industry, making sure that you're set up to be HIPAA regulated.
Right,
or
there are all kinds of
approved.
compliance and regulations that have to happen for companies to put their people in a place other than their own facility. Being Sarbanes-Oxley audit trail compliant, being Department of Defense, Wi-Fi and technology compliant, being HIPAA compliant, as you mentioned, for healthcare companies, so that personal information is protected. The list goes on, and if most co-working today really is just tilting up a coffee pot and Wi-Fi and having a community. And this is a much more sophisticated approach to co-working.
All right, as Corey mentioned, 11.3 million in the bank. What's coming down the pipeline? Are you guys just going to continue to expand? Is there more overhead? What are you guys going to be using with that money?
Yes.
And what's coming up next?
Well, we built the platform, the brand platform, the technology platform, and this next amount of money is being used to open another 15 locations in major city centers. As we open those locations in major city centers, we'll fill in the suburbs and secondary markets with franchise locations around them, again, using our multi-location area developers who are also hotel operators. So being able to deliver on promises that companies expect to be delivered upon.
I think the franchise opportunity is a very interesting strategy, to say the least.
I agree. All right, that's John Arenas. He's the CEO of Serendipity Labs. Such a pleasure to talk to you, and best of luck going forward.
Yeah, thanks very much.